Hello, kia ora. Lucia here, property investment mentor and founder of the FINAX Mortgages and Insurance. This is the recording of 1 hour live webinars. If you would like to join us in our next webinars and be part of the Q&A, please head to our website, luciaxiao.co.nz. I trust you will definitely learn a lot from this video. Thank you. All right, so we already got a number of people with us, and I'm just going to, just in case that you don't know who I am, my name is Lucia Xiao, and I'm a property investment mentor and also the financial advisor. So I'm a mortgage advisor and also risk and insurance advisor as well, and also founder of FINAX Mortgages and Insurance. Yeah, a couple of years ago, I published a book, and it's called Financial Freedom: 5 Steps, 5 Years. Yeah. So basically just sharing my story from, at the time I was living in a state house and managing $170 a week to later on that, build a $17 million property portfolio in 5 years. And obviously now it's much more now. Now it's probably sitting at 25 million now, and still got some developments happening. So, everybody, I believe that if I can do it, you guys can do it too. And I think we already have clients with us for like 2.5 years, like we were helping them to, now it's probably having a nearly assets close to $10 million. Yeah. So, come and listen to, what we're going to share with you. I think we do quite a lot of like video updates and also webinars, free webinars, like tonight, and also like our workshop. Yeah. So do feel free to actually reach out to us and also participating in our activities. Yeah. So joining us tonight is actually Lillian. So Lillian is one of our mortgage advisor, and Lillian also have a very good background, coming from the banking background, and also used to work at Air New Zealand. So excellent customer service. You can see her smiles. Yeah. And also Lillian herself is also property investors, and also she's got her project, like she's doing a development project as well. Yeah. So I'm just going to hand over to Lillian. Yeah. Okay.
Thank you, Lucia. Hi everyone. Good to see you. Thank you so much for tuning in today. Given that we're in lockdown as well, so hopefully everyone's not too bored. And yes, I agree with you, Katie. I am missing takeaways as well. I don't eat takeaways a lot, but when you can't have it, that's when you want it the most. Yeah, so I guess I'll just kick off and just that. I'll just get on the presentation. So yes, that is me. So just a little bit about myself. I worked at ANZ Bank for about 5 years, and I did a number of roles within the bank. So I just started off as the bank teller, and moving on as personal banker, working at the branch. And my last role was a business relationship manager, which I manage a portfolio of clients, self-employed clients only. And I just deal in regards to their business lending, home lending. There's some property investors I deal with the bank as well. So throughout my years at ASB, I found my passion in home lending and helping clients getting into home ownership. So to be honest, I do get really excited when I hear my clients say, give me a call and say they recently bought a property, or they went to an auction and they won the auction, or even just about that, hey, I'm ready and I want to look at buying my own home now. So yeah, it's exciting journey for the customer, and it also for me to be part of that journey that they do. It's pretty much like, helping them achieving that life milestone. So I worked at AZ for 5 years, and then all of a sudden it was how I ended up with in New Zealand is that 2 years ago I thought maybe I've always had the passion to travel, so love traveling, and then in a year I would go overseas like 2 to 3 times, having my short trip and things like that. So in New Zealand, out of nowhere, one of my friends was saying that they are recruiting, and I was like, there's no way I'll be able to get in because of my height. So I'm quite short, to be honest. I'm like only about 150 centimeter tall. So my friend said that, well, New Zealand, there's no discrimination with height or there's no rules about it. So just go and apply. So I sent my application through. To be honest, did that. I did not tell my mum, didn't tell my family, didn't tell anyone. Went through the interview, went through all the vetting stage, and then until I got the contract on my hand, that's when I was like, oh, I kind of just fluke it, just send it through. If I get it, I get it. If I don't, I don't. And somehow got accepted through with Air New Zealand. And so I thought, all right, maybe a career change. And so then that way I can get to travel the world and things like that as well. So I left the bank, went and joined in with Air New Zealand, did my travel through there. And of course, last year, COVID happened. So it is one of, the roller coaster ride, I'm pretty sure, for most of us. Though it was a bit of a down buzz because, of course, being a flight attendant, the lifestyle is great because then you're on shift work, you kind of work less and you have holiday more because, of course, when you're overseas, you can get to do whatever that you want to do. But COVID happened, lost my job, and somehow, and then I was thinking, starting to think about in regards to what to do with my life, what to do with my career now that I've lost the income and things like that. So I was looking through SEEK and I found FINAX Limited that they were looking for a lending specialist. So I sent my application through, found Lucia, got successful at the role. So it kind of a roller coaster ride, but it was the best thing that 2020, even though there was a downside to it, something still great really happened out from it. So basically found Lucia, joined the company, understand what she does, and she absolutely opened my eyes about, my light just gone off. Okay, here we go. So sorry about that. So she opened my eyes about property investment and how I am able to help my clients more, because when I was at the bank, it's quite limited. So basically, there's many customers that I can see that they have huge potential to continue on buying, or that great income and things like that. But because of the bank's criteria, the bank's limitation, I was unable to help them. And, because then we only work at the bank, there was only that one particular bank that we can deal with. So then customers sort of stuck in that position. Whereas working over here, being a mortgage advisor, I find that I am able to find a better solutions for my customer. And if one says no, there's always another one that will open the door for them. And it just open a whole new world. So it's more like the sky's the limit when it comes to finding solutions for my client. So I guess today I'll just go over in regards to a little bit about what are different banks doing, what my opinion will be in regards to what they're doing, and perhaps a little bit about which bank you should go to, or what you should be prepared for when the bank comes back in regards to their lending criteria or their recent updates and things like that. So the bank recently, they have providing update which they're starting to enforce this act a lot more for our clients. So they do ask a little bit more questions and wanting to see a little more information and documents. So what they call is the CCCFA, which is the Credit Contracts and Consumer Finance Act. So this is the law that helps to protect you when you're borrowing money. So it sets out rules that the lender must follow when they lend money out. And that also means that they are asking a lot more questions and also asking for more documentation from you. So and for us, we are sort of very thorough with our application when we send to the bank, because we wanting to make sure that all the application that we submitted through, the bank has everything covered, and then they're able to, the credit assessor able to assess your application the best of the notes, and also able to give us an approval quick, smooth, so there's not there won't be any backward and forward between us and the bank. So this act here requires the lender to act responsible at all times, which means that they need to make sure that they understand the purpose of the loan, what you need the money for, and whether if you are able to afford the loan given in regards to like the rates, the loan term. So you'll see that So you'll see that in regards to, say, for example, if you refinancing your mortgage and it's currently on a loan term of 15 years, for example, and then you're wanting to refinance that and you're extending out to 30 years time, so they're wanting to understand that you are aware or you know that, of course, extending out the loan term means reducing in your loan repayment, which improve your cash flow at the moment. However, over the long period of term, interest rate will the interest cost will cost more. So the bank is like wanting to make sure that you understand that kind of that side of the effect, and then we have that kind of conversations with you. So all of that conversations that we have with you in regards to that explanation, we do need to record it down under our diary note, so in the bank assure that you understand that side of thing. So first of all, of course, I'll start with ANZ Bank because that's where I come from. And so ANZ recently introduced out what they call as Back My Build, which is it is with a variable rate of 1.79%. Now, this is for construction loan, and as you know, we can't really get this rate anywhere in the market in regards to with the current interest rate offer at the moment. So what this means is it is a 2.66% discount off the current floating rate, and the discount is valid for 3 years. So what it is like currently the floating rate is at 4.45%, for example, then 2.66% equals to that 1.79. However, if the interest rate increases to say 5%, then it'll be 5% less the 2.66, which is the 2.34% is that what you'll be paying for. But then that discount there pretty much stay valid for the whole 3 years. So in theory, it will still be lower than whatever the fixed rate that you have got at the moment. Now, this one here is available for any construction loan, any turnkey application. So basically, if you are buying a property, a brand new build, and you put in a 10% deposit, and you have paid the rest of that on settlement day, so it's a turnkey. ASB do offer a total maximum loan term of 30 years for owner-occupied and only 25 years loan term for investment property. However, ASB at the moment is the only bank that will have debt-to-income ratio, and now this is where it will limit down your borrowing amount, because your debt, your total debt cannot be more than 6 times of your income. So say if you have got an income of 100K a year, then your total debt can only be at 600K, so it cannot be more than that, even though the calculator can prove that your income can service a debt with a higher debt or higher loan amount. They do offer construction loan, new built, minor dwelling for your property as well. So if you're looking at building an additional dwelling onto your site, ASB is able to provide a construction loan. You can actually go in with Back My Build and support that. They don't do, I guess the main thing is that they don't do big development. So if you're looking at pretty much bulk down your existing home and build 6 or 7 terrace houses on the site, that is something that the bank doesn't really look into that, because the structure and the complexity of the project is a bit more out of their not that it's out of the experience, but is that they will require a lot more documentation from you. So it's harder to get funding from the main bank when it comes to big development projects. Sovereign. So Sovereign is ASB's sister company, which it mainly focuses on home lending only. So you won't see any of its branches around because they do everything online. Just everything is pretty much online or through contact center. The rules are very similar to ANZ Bank in terms of rates, home loans, and also the lending criteria or lending policy as well. However, they prefers clients that have PAYE income or a small business or self-employed type of client. If you're having big business, having a turnover of 250k, then it's just a little bit out of sovereign's expertise or scale. Or if you are a property investor that have more than 5 properties, to a sovereign, they do treat that as business operations. So then it is, they normally don't support the lending for this type. They also have back my bill pay, back my bill rate, because obviously they do in terms of ASB and interest rate and home loan. Same loan term, 30 years for owner occupied and only 25 years for investment property. ANZ, when ANZ was the first one that issued out the back my bill pay with the interest rate, the low interest rate. So ANZ followed that with a better rate. So very similar. So it is, they offer a higher discount on the floating rate. So 2.76% discount, which gives the current floating rate for the construction loan is 1.68%. It is only valid for 2 years instead of 3 years. So that's the discount portion. They do provide up to $3,000 in cash contribution, first home buyer, or those that building a Homestar rating of a Homestar Plus 6 rating. So you just need to provide the rating and to support that, and they able to offer you the cash contribution. So because of the government announcement in regards to interest tax deductibility on investment property are no longer acceptable or allowed. So ANZ is currently the only bank that responded to that by scaling the rental income down to 65%. All of other banks is currently still at 75%. So say if you get $1,000 of rental income per week, the bank will only take $750 of that as your income to include in the servicing calculator for to work out in regards to your lending amount or your serviceability. Of course, new builder exam as per the government's announcement. Again, ANZ is a little bit different to ASB. They're able to offer 30 years loan term for both owner-occupied and investment property. Given of the current market at the moment, and as the house prices increase, so ANZ also do have a policy when it comes to high value luxury and luxury property, which means that there is a threshold within the area that if you're buying a property for that in that higher amount, then they require you to have more deposit. So normally, if you're buying an owner-occupied home, you only required to have 20% deposit. And at the moment, if you're buying investment property, it'll be 40%. However, on a high-value luxury houses, you will require to have 30% deposit, regardless whether if you're living or you're buying as an owner-occupied home. So they've increased the threshold in West Auckland from 1.6 to 2.22, 2.2 million, and Taupo from 1.3 to 1.6, because obviously that is to respond back in regards to the current market or the current house price has increased. So then the value is no longer deemed to be, say, if you're buying a property of 1.6 in West Auckland, is no longer deemed to be, it is a high value house. Because they also relax in regards to their lending policy about apartment by reducing the floor area from 45 square meter to 38 square meter. So they're supporting more of a smaller size apartment, whereas previously if the apartment is too small, the bank is not comfortable with taking that on as security. BNZ Bank. So the current turnaround time from most of the bank or majority of our main bank is quite slow at the moment. So they're between 10 to 12 working days. They don't do any pre-approval to new to bank clients, and however they do accept live deals only. So if you have got 20% deposit, you currently bank elsewhere, but BNZ is able to offer you higher lending amount and you're wanting to go with BNZ, they will only approve your application if you have committed to a purchase already, or you have got a conditional offer in on a property. So then that way they know that it is actually an application that will go through. The reason being is that the bank's workload is really high at the moment, and from past experience they do see that a lot of pre-approval applications normally do lapse or expired without customers unable to find a property to purchase, and then all the work that the credit assessors put on pretty much has gone nowhere. So therefore they only focus on live application, which means that they are able to utilize their staff time and resource a little bit better for the client to know that yep, it is actually settlement will be coming through, the funds will be issued out, and customers are actually able to purchase the property. They do offer both 30 years loan for both owner-occupied and investment property. Unfortunately, at the moment, they don't offer any high LVR application to new to bank clients. So high LVR basically means that you have less than 20% deposit, so you'll be borrowing more than 80%. They also tighten up a little bit for housing under construction. So what it is like normally the bank work on your application or on your serviceability with the requirements, say they do use two different measurements. So one is uncommitted monthly income. So what it means is that your net income less all of your expenses, less the potential mortgage repayments, it has to equal to a positive figure. And generally, it will need to be at least positive of $200 per month. For BNZ, they do use a different system, so then it comes up what they call a servicing index, which means that you normally will have to come back with a servicing index of 105 in order for them to giving you the lending or giving you the funding. So on a construction loan, BNZ has increased that from 105 to 125. So the increase in the servicing index is basically to prepare for in case on a construction loan, for in case event that you'll have some cost overrun, and then you'll come back to the bank to get more lending to cover the cost overrun. So there's already income there in reserve for you to increase that lending amount. And Westpac, so Westpac is from 1st September, again, given the taking of the CCC FA that comes in place, they are tightening their policy, lending credit policy a little bit too. So they will include expenses from investment properties such as rates, house insurance as part of the servicing calculator. Now, previously, investment properties rates and house insurance are pretty much being excluded out because technically the bank has already scaled your rental income down to 75%. So that other 25% is pretty much reserved to pay all those expenses. But from 1st September onwards, Westpac is going to, so they still scale your rental income down at 75%, but they also include are going to include these expenses as part of your servicing, which means it will be a reduction on the lending amount. So 12 months fixed rate is the same as all the other bank at the moment, which is about 2.55% for 12 months. Some of us do have, they're able to treat a home and income property as a residential property. However, if you have 3 dwellings on one title, so basically it's like a home and income, the Westpac is treating that as commercial loan, which will then means a maximum loan term of 50 years and also at commercial rates as well. Again, 30 years loan term for owner-occupied and investment property. Another amazing thing that Westpac do help with our client is that they support clients that have only 5% deposit. So in the market at the moment, there's not many banks that do accept that. So the only one that do is Kiwi Bank, and Westpac, and I believe SBS as well. Oh, yeah. But among the main banks, Westpac is the only one that would accept a deposit of 5%. So of course it is, but then they do apply with Kainga or on your behalf, so then it has to go under the cap or the limit that they issue out. So your income is capped for single at 95,000 per year, or joint income of 150,000 per year, and the house price cap is at 625,000 for existing built and 700,000 for new built. So other banks that do offer really good lending at the moment, in sort of a near bank lender, so that will be Bank of China. They do have lower test rate, which means that you can have more borrowing, and they are very, very competitive in the market at the moment, which that they're able to offer a really, really good lower rate for your lending. So fixed 12 months at 2.19%, whereas all of other banks offering 2.55%. However, they can only do a maximum lending on owner-occupied of 80% and investment property of 60% lending, which means that owner-occupied you need 20% deposit, and for investment property you need 40% deposit. Resimac is another near bank lender that will, which is really good for homeowners that are looking at purchasing another property or purchasing an investment property. However, their deposit is quite limited given the current LVR restriction at the moment. So what it is if they do provide what they call is a bundle product. So if you put your owner-occupied property together with your investment property, you're able to borrow 80% on both houses, which means that that let's just say if your current house value is at 1 million, and so then technically the bank is able to let you to borrow 800,000. Your current home loan is sitting around 600,000, so then the available equity is 200,000. That will be your 20% deposit for your investment property, which means that you can actually buy somewhere for $1 million. Compared to main bank, that 200,000 will become your 40%, which means that you can only actually buy somewhere for around 500k. Am I right? Yeah, so for 500k. Their fixed rate is also quite low. It's not. It actually for their 2 years fixed rate is actually lower compared to main banks at only 2.79%. They also have flexible lending policy, which means they're able to offer funding for clients with credit history as well. And their maximum lending is with LVR of 85%. So if you're buying owner-occupied and if you have 15% deposit, you have a little bit of credit history, they probably will be able to help you out with that. Select is also another one, and that they're able to do stand-alone investment property of 20% deposit, which is great for if you have again limited deposit, you own your own home already, and you're looking at buying another investment property. Of course, everywhere else or other bank they do require 40% deposit, but here you're able to do it with just a 20% deposit. Again, they have flexible lending policy, which means that they're able to offer funding for clients with credit history. However, and again, with they're actually able to go up to LVR of 90%, meaning if you have 10% deposit, you can actually also ask for funding from them to purchase your own home as well. So yeah. Now, just a few comments in regards to which bank I do think suits the most for first home buyers, or in regards to my our opinion. So first home buyers, if you have less than 20% deposit, and if you do bank with ANZ and Sovereign, I would say so with ANZ and Sovereign also recently too is they reduced down their uncommitted monthly income requirement. So previously for first home buyers that have less than 20% deposit, between 80% to 85%, you're required to have $500 per month uncommitted income. Or if you have between 85% to 90%, you're required to have $700. However, now they have reduced it down to $300 per month between 80% to 90% lending, which means that you can actually borrow more for, with the amount, the lower deposit that you have got. BNZ is really good because sometimes we see that BNZ is able to offer a lending with a higher amount compared to other banks because they can accept border income up to $250 per week, whereas all other banks only accept $150 per week per person. And yes, 2 person together is $300. However, if you have less than the 20% deposit, majority of the bank only accept 1 border income. So then that way, not a whole lot of your income is being reliant on the border. ANZ only offers less than 20% deposit to applications to their main bank clients only, so they don't do new to bank clients or no pre-approvals. Again, they also reduced down their UMI uncommitted monthly income requirements. So then it used to be that between 80% to 85% it is required at $700, 85% to 90% are required $900, but now that's been reduced by $200 per category. So between 80 to 85% requirement is only $500, and between 85% to 90% requirement is $700. Again, lower down the UMI, meaning higher lending amount, which means that you actually can buy a better property, a higher value property, so more potential on there. And if you do have 5% deposit, ideally it's to go with Westpac because of course they support that and they are able to help you with the application with Kaingaora. And if you are homeowners and you're purchasing another property, so you're using your available equity as deposit to purchase the next one, so you don't necessarily needing to have the cash. So like I mentioned before, the value of your property now times 80% because it is your current home, which is the total loan amount that the bank is able to offer, and you take it less of your current mortgage balance, which goes to your available equity that you can use as the deposit for your next purchase. Now, if you have got that as 40% deposit, again, we'll think of the main bank and go with the main bank. However, if it's quite limited, you can also utilize Resimac, the bundle product, 80/80, so then that way you can maximize out your lending and maximize out your purchase price. Another option that we can look at is top up to draw out the available equity that you have on your current home, and then use that as a deposit to purchase an investment property with a 20% deposit with Select, so they're able to offer a product that will help you 80% stand-alone investment property lending. Now, with construction loans, so say if you've got a big section on your site and you're wanting to look at building an additional dwelling onto it, either you put in 1 or you build 2 or you build a minor dwelling, different bank treats the construction loan a little bit different. So the main thing for the bank to look at is at the end, it would be the end value of it. So at the end of the project, how much is the value of your property would be, how much your lending would be, and what is the potential rental income that you'll be getting out from that. So it's all worked together in the application as your servicing that they work out. So the difference between each bank is in regards to how they work out the end value of your property to work out the loan to value ratio. So with ASB and Sovereign, what they look at is your loan to value ratio, so that they will look at the value as is, so the value of your property as is, plus the construction cost, times it with 10% of the construction cost equals to the value as if complete of your house. And they will then compare that value to the value as if complete on the registered valuation report that you have done. So say, for example, the value of your house now is 1 million. the construction cost is 500,000. So then it'll be the end value of your property that according to the calculation it would be 1,550,000. So when you do a registered valuation report, it actually comes back at your house value at 2 million. So the bank will compare the two value and they only take the lower of the two, which means that they only take the value at the end. The value at completion is at 1,550,000, and then your LVR will be based on that. So say that it is your owner occupied property, so the maximum loan that they can offer you is 1,240,000 on that. And so which means that if your current lending at the moment is already sitting at 800k, the available that you can top up is only 440, and yet your cost to build is 500,000, and that's where there's a little bit of a shortfall there. BNZ is able to accept the value as is on the registered valuation report, which means that if the registered valuation report comes back at 2 million, they can let you to lend up to a maximum, given that it's your owner occupied, given a total amount of 1.6, unless your current lending at the moment of 800k, which means you have 800 available for the build, and your build cost is only 500, which means it can cover up the whole of the building cost. ANZ is a little bit stricter, because then they're only looking at value as is plus the construction cost, which will become the end value of your property, and compare that to the registered valuation, they take the lower of the two. Westpac is similar to ASB, so they do have allowance on that, 10% allowance on cost overrun. So when it comes to construction loan, BNZ do stand out a lot in regards to when they work out the loan to value ratio. However, recently they did increase their servicing index requirement, which means that your income will need to be a bit stronger in order to support that debt for the construction loan. So there's a lot of talk in the market at the moment in regards to how interest rate is going to increase or going to rise really high, and same as the OCR rate increasing and things like that. So I'm not sure whether you have watched one of Lucy's video, but she did have a video commenting about this on the 9th of August. So there's a few factors there that we do think, or we do believe, that interest rate isn't going to be skyrocketed or might be increasing as high as the market is deemed to be. First of all, is like in the US, they pretty much has announced that they are continuing to printing money up until 2024, which means that there will be more money that's being injected into the market. And so that means that the cost, more money is being injected into the market. So there's more money there for people to spend. And again, in China, there's been a share crash in the market during for the tutoring and things, because then the government had decided to make it compulsory for teachers to the way how I think Lucy explains is that in China, it's like after school tutoring is really important to students and to family. So normally people that has able to the cost of tutoring, after school tutoring, is quite high, but then also everyone will have to go for it, because if they don't, then the students start falling behind in their schoolwork, and they won't be able to keep up, because they do need to do more study being after school. So the government see that, and it has made that as a compulsory for teachers to stay after school to help the students to finish their homework instead of paying for after school tutor. So then there's like a huge crash in the share market in that tutoring side. So then the cost of funds is staying relatively low. And again, that for COVID-19, as you can see, it's still going, hasn't been resolved yet. Never thought there would be in another level 4 lockdown, yet we are here again. So cost of funds reduce, and therefore interest rates will remain low. And we do believe that your OCR may not increase as high as what the markets present to be, or the market comments is. So we also have a lot of clients that's coming through and basically inquiring to say whether if they should wait in regards to buying the property now, given that the uncertainty in the market at the moment, about the interest rate increasing and things like that. So how we feel that is that lockdown is a great opportunity to buy, because we can see that vendors can be panicking and want to sell sooner, and our agents partners actually, the property agent or real estate agents that we've been talking with, what we're like doing, can actually see the trend there as well, is that previously a vendor has got a pre-auction offer in place and he rejected it because obviously the offer wasn't high enough for him, and yet now given that lockdown, he's happy to actually accept a similar offer within that. So you can see that there's like that panicking side there. There's always a good opportunity out there, so don't hold back, because then again, vendor did not accept that offer previously. It doesn't mean that they won't accept it if you do provide it, and like given with this current situation, the current time. The bank also may change their policy in the future, as you can see that the continuous changing, which may make lending harder, with given the higher workload and things like that. So the earlier you can get in, the faster it will be, and then that way it will help you securing a property now rather than waiting for later. Another thing is non-bank lenders normally have decided to stop lending during lockdown or until this is over. So some buyers are actually unable to obtain funding. They're unable to purchase, less competition out there in the market, which means that you may be able to secure a good property for a good price, because obviously main bank are still working throughout the whole lockdown, the whole period. So I guess that is it for me in regards to the current mortgage update at the moment, and just a little bit why in regards to I do believe that you shouldn't wait, and with in regards to go for it, go out there, find a property, secure that property. The house price will continue to increase. I don't think it will go down any at all. So go for it.
Very good, Lillian, wonderful. I think we got a number of questions here. So we probably answer from I think this one's from Jeremy, was asking is debt to income ratio based on gross income or after tax income?
It's based on gross income.
Yeah, and also Jeremy, another thing is at the moment, although the ASB and Solvent, they have a debt to income ratio of 6, but we do found that they are very flexible at the moment. At the moment, I mean, they are actually very flexible about it, and sometimes you can still get even 9. Like basically the customer borrowing 9 times of their income, we can still get the loan approved. And so at the moment, currently, I think they are ASB. I think they are big loose on that DTI. However, there are other banks, they kind of secretly using it. We are not. They didn't actually say they're using it, but if the customer have more lendings with them, they kind of secretly using it. Okay. And another one's from Sean was asking, will ASB look at DTI after construction or at your current stage? I.e., do they take into account for a future rental income?
Yep, they do. So then what they do is like when they do look at construction loan, what they do is they look at your in possession figures. So then they'll look at the in value of your house and also the in value, your end income that you'll be generating out from it. So definitely the DTI will count in regards to like your income plus the rental income per year, and then they will look at it that way. Yeah, so the DTI will definitely be looking at the in value, not the current one.
Yeah, so it does including your future rental income. Yeah, we got a question from Shashin. Is awesome presentation, very good. Yeah, since bank have start tightening up the loan criteria.
It's like they tidying up at some part and they also loosen at some part. So then the policy is given to us there that we follow. But from when we communicate with the bank, and I think also come another point is that the relationship with the credit assessor and the relationship that we have got with the bank do help us quite a bit. So like Lucy had mentioned is that yesterday ASB has got a DTI of 6, but then when we present the application to them, they are able to actually approve it a little bit higher. So I did actually have one client that I dealt with. So basically, they were buying their first home, and they have looking at having a 10% deposit, so they do need to borrow 90%. So quite high LVA as well. New to bank client as well. One of the bank has rejected and say that they can't offer them the amount that they need. So I called around with my previous connection at ASB, and so we managed to send the application through. So it was very, very urgent as well. So I sent the application through on a Thursday this week. We got an approval by Friday, got the loan documentation by Monday, and the customer was able to settle on time on Tuesday the following week. So within 4 working days, I managed to get a 90% application with, I think DTI was above 7 at that point too, and new to bank clients. So I used to be, even though they have that restriction out, but if it's a strong applications and also, I guess, the relationship work a little bit, so the connection is there, so we were able to get it put across the line.
Yes, yeah. That was kind of like the race. Yeah. Okay, remember that? Yeah, I think that's only just a couple months ago. Yeah. Yeah.
And I think there was also another one too. It's like same thing with same client went to ASB directly as well, and they were only approved. I think I believe it was around the 750 mark as the lending amount. However, they came to came to us, went to our workshop, understand the way how we do it, understand the way how we look at properties when we help our clients in regard selecting the right one. So they found a house and they actually ended up able to buy. So I think the limit for them at ASB was probably about the 900K. We were able to help them to increase that lending amount. Still with ASB, did not go to a different bank, and they were able to buy a property of over $1 million. So yeah, I guess it's just connection definitely helped with that one there.
Yeah, so I think it's quite important that the relationship that we have, because like Lillian coming from ASB, so still got really strong relationship there, in terms of the people they are in there, in working in the broker unit or even in the branch. Yeah, because sometimes when they're busy, they just allocate the application to the branch as well. And I think their turnaround time is pretty good as well. So it absolutely helps. Yeah. Okay. So if it's you are customer. Oh, have you got some noise there? I don't know what happened.
Sorry. Yeah. Sorry, I moved my laptop a bit.
So if it's you actually found yourself kind of stuck, you probably found yourself like, why is it I only being able to borrowing, this amount of money? And we're happy to actually relook at that for you. And I think we're really good at that, because obviously in terms of different lenders, how they're treating the incomes different. They're actually treating the income differently. Yeah. And we were actually knowing that which lender we can approach, and also using the relationship that we have, in the bank as well. Yeah. Okay. So I actually put Lillian's contact detail there, Lillian's, emails and the contact number. So you can either contact her directly, or you can actually send through, our, contact, because we've got an online contact form that you can fill in as well. Okay, so we've got Katie's asking Westpac, how do they calculate the expenses from investment property exactly. I think we probably had to hold this for now because the information we have hasn't been really officially been announced. Yeah, so we probably will come back to you, in terms of more detail. But what we know is they are tightening up. It's really clear. Yeah, okay. So probably hold this for now, but once they actually been published, I will do the video update and just explain more detail about it. Yeah. Okay, and we got a question from Prem. What are the cons and risks of going with Resimac or Select as compared to main banks? Leave it to you, Lillian.
So I guess for Resimac or Select is yes, they are a little bit smaller lender compared to main bank and things like smaller lender compared to main bank. Their interest rate is normally a little bit higher compared to main bank. The rest, I guess, the rest of it is it's not. The thing is like if something they may sort of decide to stop lending. So say I think previously in the last year during lockdown level 4, Select decided that they put a stop to their lending completely. So basically, is there any application that is already in the pipeline or any new applications that are coming in, they won't be accepting any of that. Existing client would still be okay because then they're not asking for the money, not asking for the loan to be repaid back or anything. But I guess, like, let's just say if you haven't actually committed to a property or committed to a purchase yet and you've got a conditionally approval from them, they may just pull that out and then you no longer have that approval. Is there anything else that you would add to that, Lucia?
Yes, I think like obviously with the main bank they got a bigger pool there, so they are more flexible in terms of the security. So like we had cases like the customers buying a lifestyle block, or maybe a bit away from the town center, and you will find that or like a small units, like because we have a the bank, they are able to accept like 40 square meter or what's ANZ, they drop down to 30 square meter or something. Yeah. So, but if you have things like that, with the residents today, they will pretty much say no, they're not interested because they are more conservative in terms of the security as well. However, I think they are in terms of the investment property, they are not regulated by the Reserve Bank, so they are more flexible about it. Yeah. Mm-hmm. Yeah. Okay. So we got another question from Tian. If your property is on the market and COVID is interrupting open homes, wouldn't you delay the auction tier? I don't think that's a question for us. It seems Tian, the interesting things is like because obviously we have those agents, we kind of working with, and then they've been telling us that everything still sell in auction is 100% clean, clearance rate. Yeah. So I don't know whether if it's you actually have probably going to auction or something. And I do see that the agents, that's probably more questions for agents. Some agents, it seems like they change to tender and they still get very good result for the vendor as well. Yeah. Okay. Also, Helena has actually said, fantastic presentation, Lillian. Yeah.
Thank you. Thank you.
Susie, so how many percentage do non-bank lender charge?
For Select and Resimac, they don't charge as a percentage, but they do charge you an application fee. So what it is they are selling at about the $400, $500 per application, and it will only be charged to you if your application has gone to the conditionally or approval stage. So say if we submit the application through for any particular reason, for example, security is not accepted by them and they rejected the lending, you don't pay anything. But if they have provided you an approval already, and during that period of time, say that you are also working with another lender or you're working with main bank, and that you're able to get funding from them and decided not to go ahead with their offer from Resimac or Select, then you do need to pay that $400, $500 fee. Other than that, you don't pay a percentage on the lending amount like a second tier lender. So second tier lender is more like very short-term funding. So if you're looking at funding between 3 months to 12 months, for example, or in regards to like construction loan, then they will charge you between about 2% and 2 to 3%, including advisor's commission as well. So that will be 2 to 3% of the lending amount that you'll be paying. And on top of that, there's also the documentation fee and things that they do add on to when it comes to second tier lender.
Yeah. Okay, so we had a question from Sean. So in regards to the construction loans, are there loan bank lenders that have lending terms easier to achieve than what the banks are offering?
Yep, definitely. So non-bank lenders are normally have a more flexible sort of loan terms and everything. Their turnaround time is also a lot quicker compared to main bank. So I think we've been able to have an approval within 2 working days after submitting the application through. Because the beauty about non-bank is that we normally do give them a call to present to them about the deals first, and they pretty much can tell us straight away on the phone whether it's like, yes, it'll be a deal, or no, it'll be that there's not something that they can help. However, non-bank lenders do look, they do really care about your assets. So they don't necessarily looking at your income. So even if you have low income and you're unable to, let's just say the main bank is not able to offer you the lending at that point, and non-bank is still able to give the funding because of your good assets or a good loan to value ratio. Normally they're sitting at about 60-65%, and they would go up to maximum as high as 70% of the value of the house. Interest rate and the fees can be capitalized on the loan, so in that way it doesn't impact on your cash flow during the construction loan. But then once the construction loan is done, your exit strategy would definitely be moving back to the main bank by, of course, looking at your income, the value of the house at that point, and then the income that you generate from the rental income from there.
And also they are like, depends on what you are doing in terms of the the development, because there are also lenders out there, the loan bank lenders out there. They pretty much do not require any pre-sale. They don't require the valuation. They don't require fixed price contract. They don't require the quantity survey. So those are 4 things that usually that if you are doing a terrace house development, those are absolutely required by the main bank. Yeah, so that's but obviously you pay a bit of premium for it. The more information you have, you are able to provide, you probably realize that you can actually get a lower rate. And if it's but they are also like non-bank lenders, the private lenders themselves also coming from the development background, construction background, so they actually don't require those one as well. Yeah, so there's a beauty of that, that you can go to the non-bank lenders. However, it is slightly more expensive, or maybe much more expensive, but sometimes it's worthwhile for the developer. Yeah. Okay. Tilly is, thank you, Lillian, for your presentation today. Yeah, very good. Yeah, and congratulations, Tilly. Yeah, bought a house. Yeah. Okay.
Yeah.
Well done.
Congratulations.
Yeah. Kitty, so open homes are not allowed at level 4. What do you think about buying a house without actually viewing the property, or while doing a virtual tour? The reality is, a lot of property we're buying is not really for, the building itself. We are actually more interested whether or not that the property actually have a development potential. So myself, very often I don't even bother to go to open homes. Yeah, so I might just only do a drive-by, do some analysis online, look at the files and everything. And, obviously all those, you have to do your due diligence. And all I did was actually just do a drive-by before heading to the auctions or making an offer for the property. Yeah, but obviously you have to be very confident of what you are doing. Yeah. But however, if it's because in our programs we do actually teaching people like how to do due diligence and everything and build the confidence. Yeah. Okay, so we've got Miami. Thank you for your great presentation. Wonderful. Erwin's got a question here. So if I get 1.1 million pre-approval, is that enough to buy a good property investment? I mean, a good property, a good investment property in Auckland. I think yes, yeah, you can still buy something, yeah. Because I think we do have people that still buy, the property with the development potential under $1 million in Auckland, and certainly we were helping you to actually secure something, yeah. Okay, we got Mashani saying, great presentation, very informative. Thank you. Really good. Yeah. Viv Farrell, lots of valuable and current information in this presentation. Thank you, Lillian. We got a question from Jenny. What ratio do the bank use to lend comparing to the income?
Are you talking about the debt to income ratio? So it is set at 6 times your income, so that'll be 6 times your gross income, and that income also including any border income that you get and also any rental income that you'll get in as well. However, rental and border income is normally scaled down at 75%. So the way how you'll work that out is your rental income a week is at 1,000 a week, so scale it down to 750 and times by 52 weeks, which is 39,000, and say that your gross salaries is 100,000, so that'll be 139,000, and then you times it by 6, which means that your total debt is about 834,000 for the lending. But like we say is that even though ASB have that policy out, but we found that sometimes they can be a little bit more lenient about it, which means that they can sometimes, if you have say a very good income, a really good background, or really good property security as well, they may be able to go up to 8 or 9 times of the of your income. So kind of get if you have a total income 139,000, if we times it by 8 times, then that means that you can actually borrow up to 1.112. So yeah, your lending would definitely increase as that number increases.
Thank you, Lillian. I don't know why you keep making noisy there. We could hear. Yeah, I don't know what happened there.
Because I touched my laptop. Sorry.
Yeah. Just yeah. But anyway, Jenny, my advice is probably not to worry about this right now, because at the moment the ASB is only one, saying that they are using. I think that was from last year, September, yeah. And then they have been very flexible about it, yeah. So I think probably not to worry about right now. Just leave it for now until they really decided, what's the ratios and things like that, yeah. I don't know what the ratio is going to be. It looks like it might be anything between 5 to 9 or something, yeah. So we don't know, and also how, because obviously the income they are kind of you have different income source, your salary income, perhaps that maybe your side business, and maybe your border, maybe your rental income, and how they actually scale that, or are they just going to using it together? We don't know, lots of detail. So probably just be at the moment just kind of don't even need to worry about it. Next is asking banks lends for session or lend only? Yes, but it can be very limited, because obviously the banker they don't like land banking. So basically, if you just buy a piece of land, and the bank they don't like it, so that you do need to actually have an intention to actually build, and and we probably have to actually require some concept plan or something. And I think within 12 months you do have to actually build on it. Yeah. Okay. Sean, thank you both. Great advice. Yeah, thank you. Yeah. Tilly is actually answering the question to Katie. Yeah, we now asking last week by phone bidding. We didn't get to see inside the house, only picture on Try.me. The main reason why we got it was the location, and we also had Lucia team to do an analysis on the property. But at the end, the date you made a call, yeah, you really want it. Yeah, very good. Yeah, thank you, Tilly. Yeah, okay. So, yeah, okay. So Jenny is thanks a lot, Lucia and Lillian. And looks like that might be actually for tonight, our webinar for tonight. I probably just like, I don't know, Lillian, do you have anything else that you want to share or yeah?
No, I think that's it. I think I've talked a lot tonight already. You guys, thank you so much for tuning in. Hopefully that you've learned a lot out from that, and I'm hoping that we looking forward to see if we actually can help you to purchasing your home, and most importantly is buying the right property. Because of course, if you buy the wrong property, all of your hard-earned cash or all of your hard-earned savings pretty much gone down to waste, or all the time that you wasted on that wrong property that you may need to restart again. So again, working out in regards to your lending or finding your funding, for us it is a simple job. The hardest part is actually finding the right property. And yes. Of course, Lucy has actually have a team. She's built a team, and all of her experience, she's able to help you finding that right property. Because I'll share my story too. Which is something that I always regret, but Lucy told me to look forward, don't look back. So before I bought my first home in 2017, at the end of 2017. So it took me over 6 months to actually find that house. My budget was very limited. I only had 10% deposit. Again, to be honest, my budget was around 500k. So it was super, super low. Not something that I'm proud of. Actually, I'm proud of because then, did it on my own. I bought my first home. So bought it. Took over 6 months because I have absolutely no idea what to look for, what kind of property to look for. And the done-up one is pretty much outside of our budget, but the really rundown one, then we were so worried about that we needing to spend extra money to renovate it, and we just don't have the money at that point. So then it was just so hard to find it. Found one at the end of the day, settled on it. I have it on for I think over 2 years, and because of COVID last year and because of my job issues, I decided to sell the house. So I sold it before I met Lucia. Settled on in June, met Lucia in September, and realized that was the dumbest mistake. I shouldn't buy it. I mean, I shouldn't sell it at all. Because then when I learned from Lucia in regards to analyzing the property, so I looked back at that house, I actually analyzed it. It actually met the requirement to the development on it. I could easily put another dwelling on there with no issues and everything. So I could actually grow out from it, increasing my portfolio from there. And sold it at the wrong time as well. So I literally only made 50k as in, the gain from it. I mean, I did make a loss, so I shouldn't be complaining about it. But, it's just it was, again, a mistake there. So, netless, being with the team and working with the team, Lucia helped me purchase the next house. So I started looking at the market in October, and I didn't even look every weekend like I used to, didn't even go to many open home, literally analyze it online. I went to view the house once, one at the auction in December. I settled on my house in February. Again, with Lucia's guidance, I did a little bit of renovation to it, add value to it. So I bought it at 970k, add value to it, and I recently did a valuation on it. So it is now valued at 1.275. So again, that is in less than a year. The value increased by about 300k. And also at the moment, I'm working on building 2 more dwellings at the back of it, given that it is on an 800 square meter site. So yeah, and the building consent is in place at the moment. So hopefully, sometime later on this year or next year, I'll be able to share with you guys about my house and the journey that I'll get there. But
yeah. Personal story, yeah. Right, okay. So we got a number of people say thank you so much. Yeah, Yolanda, thanks Lucia, and Lillian and Lucia for this great webinar. Enjoy your evening. Right, okay. And I should see you next time, and good night. Yeah.
Bye everyone.
Bye.